Hello and welcome to ETCI or BFSI Digital Conclave. The theme of this event is BFSI 2025 Strengthening Digital Connectivity. And I'm going to have a wonderful session here because I have the top notch from the small finance banks and also from the tech side. And we are going to discuss the hyper-connected world. Yes, the name of this session is BFSI 2025, the hyper-connected world. At ETBFSI and whole, ET has been covering the hyper-connected world as a series in the banking, digital banking segment, and we have been getting overwhelming response the way the banks have been customizing their products, specifically keeping the customer experience for their customers. We thought the hyper-connected world is going to be a remarkable going ahead. And the whole idea of exploring in this session is how the BFSI or the whole the banking and finance industry will look like in 2025. How will they strengthen digital connectivity and how actually they will offer the hyper-personalized services in the connected world. So that's why the theme is here. And let me take honor to introduce you to the top speakers from the industry who's going to give us their perspective on this session. So my first speaker for this panel discussion is Mr. Rajeev Yadav, the MD and CEO of Fincare Small Finance Bank. Mr. Yadav, glad to have you.
Thank you, Amol. It's my pleasure to also join for the session.
Thank you. My next speaker is Mr. Ajay Kanwal, the MD and CEO, Jana Small Finance Bank. Mr. Kanwal, glad to have you.
Greetings, Amol. Always a pleasure to be with you. Thank you.
Thank you. My next speaker is Mr. K. Paul Thomas, MD and CEO, ESAF Small Finance Bank. Mr. Thomas, glad to have you.
Thank you, Amol. Thank you.
Thank you. And my next speaker is Mr. A. Balakrishnan, Director of Google Cloud India. Mr. Balakrishnan, glad to have you.
Thanks a lot. It's a pleasure to be here and really to hear, all the MDs of the small finance banks, have their vision for the next few years.
Thank you. Thank you so much. So, gentlemen, let me begin with a common question for all of you, and maybe then I will get into some specifics. And please feel free to add your perspectives as and when you think, you want to make a point apart from the questions that I will ask. So I will start with you, Mr. Yadav. And my first question, which is going to be for all, is considering the major changes, developments that we have done in the banking and the finance space or the whole BFSI ecosystem, how do you see 2025? We have seen a great or a remarkable innovation, specifically in last 2 years, and I'm sure a lot of innovation that we did will continue for next few years, and adding will also add a lot of innovation. So, how do you see the BFSI sector in 2025? And more importantly, how do you see the hyper-connected world? Because the world will have the BFSI world will have platform, SaaS model, BaaS model, and a lot of things. So how do you see the hyper-connected world then?
Amol, clearly, as you have sort of picked up, I think the world is changing very dramatically across decades or now across 5 years. Now I would even say, over 10 years. And we can see the change from 2000 to 2010 decade to 2010 to 2020 decade. And now we're talking the third decade of the century. And what a dramatic shift that we are seeing. If we go back to the digital banking world, and if you were to just look at 5 years back or 6 years back, around 2015, I think this was so early days, and even mobile banking, the way it exists today, wasn't really out there. And we have seen a dramatic change. What we thought, what was a digital space, you're defining it, how will it roll out? We have seen a dramatic shift, not just because of the pandemic. I think it was anyway happening before the pandemic, and pandemic just accelerated it. So we've seen a dramatic change in how the digital has actually become very much part of the DNA of the financial services over the last 3-4 years. And if you would ask how to be 3 years forward, I would think pretty much everything will become a digital workflow. Be it a lending decision, be it a payment integrated with a customer servicing solution, be it deposit gathering. Today we do digital banking in a simplistic manner, which is not fully connected. It's a standalone process to a larger degree, although lending would have a lot of elements which are connected, but there are separate ecosystems for some of these activities. They are very digital in their nature, but less connected. If you look at 3 years forward, thanks to UPI, thanks to account aggregators, which are going to get launched, thanks to newer technologies that are getting launched out there, I think all these ecosystems will get extremely interconnected, and they will benefit from information, benefit from data which exists in any of these ecosystems to make smarter decisions, bring customers on board with a better customer experience, or actually service the customers with better customer experience. So I would think conceptually, the technology that we use today might still be the same. They may just evolve a bit, but the way it is interconnected and used will dramatically change over the next 3 years.
Okay, that is good opening remarks, Mr. Yadav. I will come to you, Mr. Kanwal, and would like you to answer the same question.
Well, Amol, I think in 2025 is not a benchmark year, but directionally, folks, where we are going is like this. I think, or rather, I believe that we certainly will see banks with deep strategic partnership with fintechs. I see banks available on every platform. So our friends from Google are here. So, all banks will be available on Google. And so you will see a real cross-pollination of a significant degree between platforms, fintechs, and banks. I certainly think banks will have a lower cost income because your real ability to attract customers, serve customers will go down. And I think on the flip side, there will be some revenue share with all the new intermediaries coming into the business. I think from a qualitative angle, banks which are good at risk management, advisory services, because those are real value adds in a true sense, will obviously do better because incrementally all transactions and deposit business will become more commoditized. And I think that probably path is already started in my mind. Banks in 2025 will certainly make sure that they are over-invested in cybersecurity and privacy, because I think those are the two key risks as we get more and more digitized. And I think the customer education will be significantly enhanced because we do see that a lot of challenges are arising in the digital world purely because of customers not knowing all the right things to do, certainly like password sharing, etc. The second question, Amol, on hyper-connected world. I really think very similar. So I think the key risks are privacy and security. And I think the added risk, which is why I mentioned advisory, is loss of a human touch. While people will enjoy the service, but if they do want advice of what is the right loan for me, is it fixed rate, floating rate, what are the right kind of investments for me, how much insurance I should take, I think those are really well done by humans and people will want the interaction. Part of that can be digitized, but I think there will be a certain emotional loss. I suspect people would like to meet the bankers. And I think for small finance banks, where the job is financial inclusion, I think the digitization will make sure that the financial inclusion really spreads even more deeper than it is today. Thanks, Amol.
Okay, noted your points, Mr. Kanwal. Mr. Thomas, can I have your perspective?
Yeah, more generally, I agree with what Rajeev and Ajay said on the 2025 visualization. But more on an end-to-end digitization will be the key, and banks will start using moving more to more cloud. Will be the more. As of now, it's very, especially in India, it's not started that level, but more and more will be using cloud services. Then data and artificial intelligence will play a key role. And moreover, especially in small finance bank, which we have a deep rural focus. So still, I still believe that even by 2025 also there will be a personal connect will be required. So we will be more on the agency banking will take shape in the coming days. And banking correspondence, that it has been permitted by the Reserve Bank of India, but it has not taken off very much. BC managed banking outlets will be formalized in the coming years. So then banking services will be available everywhere, because through digital it can be accessed everywhere, and so like FMCG products. So I hope by 2025 any kirana shop will deliver cash using their mobile. So even every customer will become will now only referrals are being done, but they will become delivering banking services. So that is going to change. So on the the risk we foresee is that again on the security and the regulatory risk we foresee going forward due to the specifically on the banking context. This is my I foresee banking in 2025.
Noted. I think I got a good headline that banking will be like an FMCG in 2025. Thank you. Thank you so much, Mr. Thomas. Mr. Balakrishnan, I will come to you, and I will slightly put the questions in your background is very different, which is very important, in the banking industry today. So one, obviously about 2025, that is my primary question. And second, I also want you to add about the emerging technologies or various tech platforms that you think the BFSI companies will leverage to improve the customer experience going ahead and, offer the better service to their customers.
Yeah. Thanks for that question. So I heard all the esteemed guests out here, right? So I might have a little bit of a view towards the small finance banks in this, conversation of mine. So if you look at what are the key driving forces financially in the financial services, we are talking of, and I'll take 2026 because that's over a 5-year period. We are talking of 4x growth in digital payment transactions, from 43 billion on to 150 billion transactions in 2026, right? Buy now, pay later. If you're talking of that, 15x growth in that, which we are talking of 3 billion to 45 billion. MSME credit, very important for small finance banks, 1.5x growth there, right? From 375 billion to 600 billion in 2026. 2x growth in insurance, premiums, right? From 121 billion to about 288 billion. So if you look at the parameters, right, the largest middle class, 700 million millennials, the data consumption, and then you look at what the innovation and the disruptions and the regulations are happening, right? So we are talking about the government's digitization push. So we started with demonetization, GST, then, the differentiated banking licenses for small finance banks, digital KYC. Now we are talking of account aggregators, right? Who are going to enable real-time access to consumers, obviously with their, consumers' data with their consent. And then there is open banking, right? We are talking of, OCEN. Open Credit Enablement, platform, right? And then we are talking of ONDC. So if you're looking at all of this, what is going to very importantly play a role, obviously, is the role of embedded finance. Now, how are all these platforms going to come together? If all of these platforms are going to come together and enable Bharat, as we say, right, the Indian population scale open credit and commerce stacks, you are going to need a platform which is absolutely elastic, which at one point in time helps you acquire new customers. So how do you acquire new customers? How do you engage with them at the time of acquisition? If you're talking of rural, are we talking of vernacular mediums to help them, answer their questions, right? So that they get confidence in terms of, coming to the banks. If you're talking of the journey itself, how can we help them operate in a very seamless manner by automating some of the processes on the paper side, on the process side, straight through processing. So in general, building a better customer experience so that, you help the customers, stay on the platform. And I think that sort of addresses, the role the platform and the cloud platforms can actually play in this growth, because all of this embedded finance, all of this OCEN platforms are essentially going to be on the cloud. And I think so that's going to be the real platform for this entire hyper-connected world.
Okay. Noted your points, gentlemen. Let me get into a bit specific, and I will start with you, Mr. Yadav. I think valid points in the first round, great opening remarks here. I'm sure the attendees will enjoy that. So, Mr. Yadav, tell me something very specifically now. So digital will be there, but don't think the branches will disappear overnight, right? So, but end-to-end digital banking, is just going to be there. Like you mentioned, sometime like payment, lending, deposit, all these things will also go for digital. So my question to you, sir, is how are you at Fincare Small Finance Bank maintaining the balance between the digital, and the whole physical model?
So Amol, I think this thought is not a new thought. It has been there for the last 3-4 years. We are all beneficiaries that we started our new banks in an era where branches, the need and was diminished thanks to digital solutions out there. And I guess it is a direction which is going to be there for the future. So what have we seen over the last 5 years and what we can probably see over the next 5 years? I think clearly in the bigger cities, the need for customers or their desire of customers to walk to the branch has dramatically decreased. And this applies to the larger banks, and this definitely applies to some of the newer banks at this point of time. But what we've also seen in the metro world, in the bigger city world, is that you need a reasonable branch coverage where people feel comfortable to come to the branch once in a while if the need arises. And a model today which sort of completely rise on digital at this point of time is a bit challenged because either the trust factor of the customer or just the feeling that I can walk into a branch if the need arises, that feeling of security and safety cannot be fully answered if you are a pure digital bank in today's context. So what we typically at Fincare have done is that we have tried to build in a reasonable network across cities, and also among the bigger cities, keep on penetrating it by, because the cities have become very large and the travel distances and time have become very large, so keep on penetrating that. Now, we are the benefit that we don't have to put hundreds and of branches in every city, especially the bigger metros, but clearly we feel the need for 10, 20, 25 branches, even in the bigger metros at this point of time. When we look at the Bharat, the rural part of the country, and we are strictly not rural because a lot of our branches are still in tier 1, tier 2, tier 3, tier 4 cities. I think those branches are catering to presence coverage, where employees can be out there, where we can handle the compliances, and where our customers can walk in. Again, for taking some of the loan products where we need to do a physical touch. So the need is more geographical spread and depth because the customers do need to see a physical location, a physical office, for more comfort or for just doing some necessary steps. So I would say that in those cities which are starting from tier 1, I would think for any successful bank, the presence element is very important, and therefore reasonable branch coverage across the towns and cities of the country is critical for some of these small finance banks like us. Although we may not need to put in a large network of branches, we may be even able to operate a small town by one branch, whereas in the older model, people were putting in a large number of branches. We can operate it in one branch. I think the need still exists. How it will be 5 years forward depends upon the digital penetration of our rural base, of our semi-urban base. But as I see forward 5 years, we should have good coverage across the country. In the bigger cities, we need multiple branches, but clearly not in large numbers, but a reasonable spread across the larger cities.
Okay, I think those are the good highlights, Mr. Yadav, in terms of how the combination should be and how the combination that you're crafting between the urban and the rural. I think meaningful thoughts here. Mr. Kanwal, you also mentioned, various features about how the banks are doing digitalization. The immediate question that comes to my mind is, I often, excited to ask this question to all the bankers is how do you actually measure the success of digital? Because, the question is in two parts. By the time maybe you adopt one technology and start using it, the other technology is there, the upgraded version is there, or something like that, right? So how do you actually measure the success?
I think, Amol, there is nothing that we can do to kind of stop technology from improving. And we got to make sure at some right points we evaluate whether we are outdated or not, and then kind of make a change. But if you look at how we at Jana look at digital success, we look at it in 3 silos. I think the first one is consumer. So, and this is in line with what Rajeev said, 98% of our transactions in the branches are digital. So I think the whole adoption of how the consumer looks at the way the bank provides services and how digital is being used. 99% of all savings accounts are opened digitally. So for us, one measure is how customers use the bank's digital products and services. I think the second piece is around our own staff. How do the employees use digital assets? So 90% of our employees have tabs. So even though in digital, you have two options, right? You're either self-directed, which is you go and you do get a bank service or a product digitally, or you want to be assisted. But even if it is assisted, it can be assisted digitally. So the whole idea of, mobiles and tabs with our staff make great opportunity for us. The third piece is around processes. Again, if you really wanted to do digitization, it doesn't have to be only at the front end. It has to be end-to-end digitization. So one answer that we have picked up at Jana is, as much as possible, put bots so that you really have real-time, no mistakes, first-time right approach. So we have a measure around how many of our processes can actually be robotized, and we have a measure of where we have reached. So 3 silos, Amol, of digital. There is obviously an external benchmark, which is learning from the newer players, newer ideas, and making sure that we either see what they're doing and bring those good parts for our customers. But we are very open-minded. So wherever possible, we collaborate and make sure our customers get access to those. But rightly mentioned, things are evolving and we just have to keep on our toes.
Okay. Valid points. I think need to be on our toes is going to be a nice headline, actually. Meaningful thoughts here, Mr. Kanwal. Mr. Thomas, let me ask you another question. Obviously, there is no alternative to embracing technology, upgrading to digital constantly. How do you actually ensure at your bank that whole workforce adopts the new technology? How do you actually ensure that there is no speed breaker between the headquarter and the branch? How do you see that the message is translated? Because there are high chances that that what you implemented at headquarter in terms of digital technology or new decisions perhaps will not reach to a last or at the bottom. How do you ensure that?
Yeah, thanks, Amol. As Ajay earlier said, see, we are mostly into rural banking. So our staff are doing 99% of our frontline staff have tabs. So now we are also introduced BYOD concept. So even their own mobiles and tabs can also be used to do transactions. So and the entire transactions can be done only through the tabs, and that reduces the transaction time, the tab, significantly. So that really makes them to use these solutions. And on the second level, they have to educate the customers to use especially during the COVID lockdowns and all, the staff were using and helping customers to use digital channels. So now that process is also happening. So we make sure that, and we through an MDM, we have a centrally controlling the use of all these digital devices by the tab. So that control is there. And then we regularly conduct training programs to the staff on all digital products and services on their vernacular language, because most of our service delivery staff are from the low income segment, and English doesn't work everywhere. So we use vernacular for training and communicating with the staff. So through these different methods, we make sure that the staff are using the digital devices and helping the customers to slowly migrate to the digital channel from the physical channel. So that's how we work.
Okay, noted your points, Mr. Thomas, and I think that is very important to reskill your all the employees in terms of technology, because different people, different languages. One way that is an identity of the country, but the same message has to be translated on the other front. So, Mr. Balakrishnan, as we are talking to the small finance banks, which are catering to tier 2, tier 3 cities far more aggressively, that's what their agenda is, and using advanced technology. So, my question to you, Mr. Balakrishnan, considering all these backgrounds in the mind, I'm sure you must be talking to a lot of BFSI companies. So, in your experience, what are the major challenges that the BFSI companies face while adopting, dealing with the technologies or the new format advanced tech?
So I think when we talk about challenges, I would probably believe that when we look at Bharat, right, or when we look at India, how do we really have a seamless interaction or a frictionless interaction with those consumers who, as Mr. Thomas put it, right, that they might not exactly be, fluent in English, and they might be more comfortable in their own language. So how do we really get those folks included in this entire financial inclusion journey, and get them as consumers and make them stay as consumers? So I think if we look at customer acquisition as one of the challenges in this entire space, we believe vernacular has a huge space to play here. Now, if we can help those vernacular conversations, whether it is based on the voice, and when we say voice, we are talking about a human-like voice, which is there because, as Mr. Ajay also mentioned, right? How do you get them to trust a voice, and then also make them come to the bank eventually to build that imprint on that trust? So I think the biggest challenge obviously is getting the trust of the consumer, and in that situation, getting these natural language processing bots, assistive bots, to really help with the robotic applications to help with the conversational flow, to help and build trust, right, over voice, over video, over text, for that matter, if they're comfortable with the text piece of it. That, I think, is the first biggest challenge which can be overcome. So there are bots which are already there. There are banks which are using those bots to really build upon that trust for complex transactions, right? Suppose if you're trying to say deny a debit card transaction, so some of those complex transactions using those bots are already in place. I think the second challenge which is there is, how are you going to look at the third party platforms? And looking at the third party platforms, just hypothetically saying, right, if you're taking a look at, say, even in retail digital payments, I just had some data, right? If you're talking of volumes itself, the volumes on a bank platform, while they will move actually from 75 to 55%, the third party platforms actually will increase. Similarly, on unsecured digital lending, right, the third party platforms will have 65% today to 80% in terms of third party platforms. The banks itself will move from 35 to 20%, which is these digital lending happening on the bank's platform. If I look at savings bank itself, right, FY21, we are talking of 95% happening on the bank's platform. That again, almost a 20% decrease on that, right? So 25% will now happen on the third party platforms. So when we look at how we are going to integrate all of this, the volume itself is going to be staggering. And the only way you can solve for these staggering volumes is to have a end-to-end process which is totally digitized, totally automated, and that can only be done with what we call as APIs. And we are talking of business APIs, right? I will also allude to the clear description which was provided by before, which talked about consumer, staff, and processes, right? So we can have all of the operational improvements, including contact center automation, including document automation in terms of, parser as a service. How do we get the KYC documents with, say 80% accuracy, so that it clearly removes, all the delinquencies? How do we automate processes to ensure that early warning signals are there? Because lending is going to be the biggest area for all of the small finance banks to grow, right? So how do we quickly get those decisioning done? And all of those decisioning could be based on data, and it could be based on AI and ML. So as long as there is a model which is already learning, self-learning, you could have better and better credit decisions. And as we said, lending and credit are going to be the two most important aspects of this entire journey of growth. So on one hand, how do we acquire the customers in the vernacular medium, make them comfortable in the language and get there? The second is, how do we address the scale of all these transactions, which, you have a loan service provider on one hand, which has a digital platform, and then there's a technology service provider, which essentially is going to be the embedded finance part, and they are the ones who are going to work on this entire OCEN protocol. how are you going to work with the lender, which are all the small finance banks, which are going to provide the access to capital and the core banking networks for these embedded finance providers, infrastructure companies. And then lastly, the MSMEs or the individual borrowers who are the borrowers, right? How do you get this entire ecosystem going and yet operationally servicing them? I think these are the three challenges which we could address with the technology areas.
Okay. Detailed one, Mr. Balakrishnan, and I can see the importance of those points. Thank you so much for adding that. Um as digital is evolving, and Mr. Yadav, I would like to come back to you and share more insights on the experience front. I mean, we all spoke about the millennial story. We all believe in the Gen Z story, and we were talking about whether the branch or the branchless. But very recently, my nephew turned 18, and the first thing I asked him is, just go and open a bank account. He says, "Yeah, I want to, but I don't want to go to a branch. I want everything in app." And I'm talking about it, but I could see a live example in front of me, and then I realized, oh, perhaps the Gen Z will specifically go for the branchless banking. So, Mr. Yadav, is it tough to constantly improve the customer experience? One, you have these new customers coming up, Gen Z, which has seen Zomato, Swiggy, Netflix, Amazon. They expect the same kind of experience in the banking as well. So how tough it is to service the demand of the new age customers?
So, Amol, I would say I can say both ways that it is not that tough to upgrade the customer experience, and I'll give you an example of why it can become tough to upgrade it. I think when we look at the imagination that all of us as leaders have, typically we can imagine very quickly that what is the necessary elements that we need to sort of expose a customer to, let's say in an account opening process, and what are the good ways of doing that. So that imagination, by looking at alternatives, by looking at, to your point, the consumer companies which have brought in some very good customer experience frameworks, it is not very difficult to visualize that, and in the present context. But having said that, the difficulty is to take those concepts and bring them inside your digital platforms and make them part of the journey, because it's easier said than done. As I always say, products can be copied very easily, but technology cannot be copied very easily. Copying a technology takes 6 to 12 to 18, 24 months. Technology can be a core differentiator for any institution for a much longer point of time than a product differentiation or a pricing differentiation, because those tend to be copied much faster. So I think it is difficult from bringing the new concepts in at a fast enough pace, whether your technology partners, whether your own in-house development teams can bring those things to fruition much faster is the real challenge that we'll all experience. To the point that Ajay made earlier, technology is evolving. Some things, become obsolete over a point of time, so they need a fundamental architecture change, or just the new experience, new solutions come up because there are some smart SaaS solutions, database availability where you can integrate it for much better outcomes. So it's a constantly evolving world, and I think being able to track it and move in that direction not very difficult. A lot of us have good solid teams. Each one of us have become very digitally smart over the years. But just keeping pace with it and implementing it is a much bigger challenge. And just how do you keep the architecture simple between the external vendors, the core banking solutions within your own digital layers that you add on top of it? Those kind of elements have become much more important, and they will sort of drive the speed of change for most institutions like ourselves.
Noted your points. Mr. Kanwal, I will. You partly mentioned about the revenue sharing and what kind the partnerships that you having with the fintechs and all. My question to you is, and if you could elaborate here, will be really great. When you're talking about 2025 and hyper-connected world, when the banks are aggressively partnering with technology companies, fintechs, deep techs, and they are actually partnering on a revenue sharing model, right? The fintechs are a lead generator for the BNPL and a lot of lending products, right? So how the business model of banking will shape up or maybe look like in 2025? Do you think that banks' profit may go down because of you will share your revenue profits with the fintechs, or will it double because they will generate more leads for you and you will do more business? How will it be?
So Amol, let me first make a few points on. something that has been said a bit before. So your 18-year-old nephew, we would also not like him to come to the bank. We would also like him to open the account digitally. And that's a fact, right? And I must tell you, last night I was at a dinner and somebody said, where's the nearest branch? And I said, just use video KYC, because I know he wants to put more than 1 lakh. I said, just use video KYC. You'll love the experience. So I think banks and, earlier Amol, you asked digital and physical. I think our minds are digital first. And what we fail digitally, we will put physical in it. It's just reverse of what we did in the past, right? Everything was physical and then you busted in digital. It's now the other way around, which is everything is digital and then wherever you have gaps or needs, we put physical in. I think Mr. Balakrishnan mentioned perfectly the answers that we are looking. It's all API based. So today, when a customer says, go and fetch my income tax returns, he gives us permission. Fetch my GST return, he gives us permission. There are various providers for them, reading bank statements, right? Now, all this costs us money. But see, on the flip side, it is great customer convenience. And in some cases, it is saving us money. So, for example, if I'll give a real example how we do it. So, if you have the bank statement in a PDF file, we have a software which reads the PDF file. It also highlights to a credit manager where are the problems in the bank statement. So check bounces, turnover issues. Now, in the past, the credit manager would actually take his calculator, pen, paper, whatever else, and do the totals. The chance that it of course takes him time and he could make mistakes. But now the machine is reading it and machine is also prompting you what questions to ask, right? So I think the simplistic answer is that, of course, I would have better credit quality because I invested in this simple thing. So what I did mention about 2025 Amol is actually happening as we speak. We have multiple APIs. I'm talking of like last time was about 60 APIs connected. We would like to bring all data possible into the bank to make it easy for customers. But because it's digital, it makes it very easy for us because we can analyze, right? If I give all the data of P&L digitally, they're so fast. The system will only calculate, what kind of debt burden we should go for. So I think as we go forward, banks are blessed with the ecosystem that has come in India. One, with the payment side. I think we have the best stack in the world. And secondly, I believe with all the fintechs coming in, it gives us more power. Revenue sharing won't be a problem because it'll be better service or better credit decisions by the bank. And of course, like Mr. Balakrishnan said, it'll also bring more customers to the bank. It's more access. People come in more easily, feel more comfortable. So I think it'll be a win-win, and we will see banking services available to consumers in a very different form. I mean, the whole pace and size will change. And truly, I think the challenge really will go into machine learning because, see, giving a loan unsecured on a platform is not rocket science.
True.
But using that and then evolving the model will, I think, where the real money will lie. And I still think the story is not written on that.
Detail one, Mr. Kanwal, in fact, remarkable thoughts there. And I think the UPIs are, making a big difference. I still remember, 3 years back, I went to Singapore Fintech Festival and met somebody from the DBS Bank, and he says, the kinds of difference when we had 2 APIs in our bank was different, and when we had, I think then they had 150 APIs. It's remarkable. We ourselves can see the difference. I think the API is changing and transforming the banking system far more significantly. So, Mr. Thomas, my next question to you, and specifically about the technology, the branches, and Bharat. So the Bharat is still away from technology and bank branches. Not every part, but few parts. Since your focus is obviously to cover the Bharat, what are the challenges that you face while reaching out the last mile and dealing with them? Because at one side, digitization is helping you to reach those people, but are those people very well equipped to open their bank accounts on the mobile phone? Are those people really ready to adopt the technology or the digital banking?
Yeah, to a certain extent, I would say. But there are challenges. Specifically, connectivity has increased in India. Now, even anywhere in the rural, you have internet connections are there. But the digital literacy part, actually, that need to be even the segment we serve, especially in the rural area, the financial literacy itself, we have been doing, continuously we have been doing. Now the digital education, so there is hand-holding is required. So hand-holding to the customers is required to move them to digital. So another challenge we face is that the people change their mobile numbers very frequently, and they use same mobile number is being shared by multiple people. So so doing transaction, even for loan confirmation, we send a message, so it may not reach them directly. So these are all practical challenges we face. So how we wanted to, so that's why I said earlier, maybe for a few more years, assisted digital will be the phygital will be the roadmap for reaching out the Bharat, the rural. So what we are trying to do is that we are appointing business correspondents across the rural towns, because we cannot open branches, and we are training those agents. We already have around 6,000 agents in place, so they are connected with the base branch. So they will be providing they will reach out to the customer, they will provide the doorstep service using their tab, using their mobile. So they actually they get the digital experience, but not by only thing that they are not, it is not initiated by the customer. So, and in the process, the digital education, digital conversion also will happen. And over a period of now, we'll so just as Mr. Balakrishnan earlier said, that voice, so voice messaging is very popular. So the voice banking, maybe send a voice message. So we need to build upon it. We have not yet done that. So we may have to build those. So a vernacular voice message can recognize their request and process it backward. So all those will be coming in the coming years. That's how we'll be able to serve the rural.
Okay. Thank you, Mr. Thomas, for actually highlighting the issues, challenges, and how you are actually dealing with it. So, Mr. Balakrishnan, let me create something on what Mr. Thomas and Mr. Kanwal said some time back. So, as you know, the banks are reaching to unbanked population and the first-time user customers. I'm sure there will be a lot of challenges there. So, and since you're talking about the digital and technology, what role or how the various tech platforms, technologies will play a great role in upgrading maybe this new age customer satisfaction or the new age customer service, from the bank's perspective.
Yeah, so I think great thoughts from Mr. Rajeev, Mr. Ajay, as well as Mr. Thomas. I think a lot of you spoke like technology people, and I must really acknowledge that. So let's take a platform like YouTube, right? It's a great platform for dissemination of information for digital literacy and education, right? So assuming the unbanked population has actually become a customer, how do you keep them on the platform and get them to do newer things, right? How do you really increase your wallet share with that set of customers? So YouTube is one platform which probably it's already used by millions of Indians. It's already used at every area. As we all said, mobile connectivity is already there. Let's look at another platform like ShareChat, absolutely vernacular. How can you use a platform like ShareChat to also disseminate information about your bank, about the various methods and the various offerings from your bank? So that's from a customer acquisition perspective and a customer experience perspective, right? How do you build an application? Now, when I say building an application, a lot of Bharat or a lot of India would probably have Android mobiles. How do you build an application which then tries to talk? Now, I'm not getting into sub-dialects and all, because that would really, make India truly uncomfortable. Sorry, truly a big problem to solve. But if you have a vernacular language, on the application which the customer can engage with, that becomes another great area for customer engagement, right? It really builds trust with the. I mean, you download it from the Play Store, and if you have it in the language you're really wanting to converse with the customer, I think that sort of helps. Now let's look at a genuine problem banks face, right? On the UPI side, if you're doing a 10 rupees transaction, that 10 rupees transaction eventually comes and hits the core banking ledger. Now, there are millions of such transactions happening, and depending upon the festival dates, depending upon the salary days, there's a lot of pressure on the core banking, infrastructure. Now, how do you really help banks, with the scaling out of the issuer switch? How do you really help build a payment subledger, which takes the core load out of the core banking, software? And this is UPI, right? So you're just trying to pass through a transaction to keep the customer happy. The banks are not making money out of this. I mean, I'm presuming so. If any of the banks are making money, I'm very happy to listen to that use case as well. But you're not able to make money. You're just keeping the customer happy that my UPI transaction went through, because quite often you say, yeah, this transaction did not go through, right? You try some other means. Now, if we are able to help the customers again through data and AI, help monetize that data. So there's a lot of data. There's going to be a treasure trove of data coming in because of all this embedded finance, because of all these LSPs, because of all the TSPs, right? You're going to have a lot of that available as data. How can you help monetize that by building a model? Okay, and the third most important piece of it, right? Because of the millions and trillions of transactions which are going to happen, there will be aspects of fraud. What if we can stop the aspect of fraud at the transaction level itself, which means at the time the UPI transaction is happening, is there a possibility for us to detect that fraud? Which means that the bank is happy and the customer is happy as well, right? And I think there are solutions in that space which are now coming up, where UPI is not just seen as a pass-through transaction platform, but can the banks monetize? Can the banks enable the, or improve on the risk and fraud position and say that, yes, I'll stop it at the transaction level itself, and therefore it really does not cause any more transactional impact to the bank. But all of that has to be underpinned by what Mr. Ajay said, the API marketplace. That is what is going to, and that will lead to everything: transactions, the security, the privacy, all of that, because of the huge amount of data. That's what is going to probably enable this entire marketplace in 2026.
Very meaningful. I think you took 1 year ahead because of the 5 year plan. You were discussing about 2025, but really meaningful. Wish I could have taken more questions, but my 45, 50 minutes are up here. The watch is already started ticking. But thank you, gentlemen, for sharing, your remarkable insights here at this platform, and telling us how the BFSI 2025, the hyper-connected world looks like. So thank you, Mr. Kanwal, thank you, Mr. Thomas, thank you, Mr. Balakrishnan, and thank you, Mr. Yadav, for great, remarkable thoughts here. Thank you so much.
Thanks, Amol.